Hello, so it's Tuesday the 2nd of April and we've got a little bit of a pause and another leg lower beginning in Bitcoin. Not unexpected. April can quite often be a tricky month. Seasonally in April there is usually a little bit of a nasty pullback mid-month, but it's not seasonally a bearish month. We've also, for the first time ever, had 7 green months in a row in Bitcoin prices. Normally it only kind of the longest kind of bull runs before we have a correction sideways month have been 4 or 5 months. So here we are kind of overdue for a little bit of consolidation and a little bit of a pullback. In previous bull runs, we've seen 4 or 5 pullbacks of like 20% before continuing higher. So given that this is what we normally do around a halving, I think we looked at that before, sometimes a couple of weeks before, sometimes it starts after, but it does tend to, around a halving, have a little bit of sideways consolidation. A halving has never been a bearish reversal. It has always just been a little bit of a pullback before a monster rally begins. So there really isn't any reason at the moment to be bearish Bitcoin or think that we're going to see some massive reversal. And if we get a 20% or 23% pullback, it's going to be an opportunity to buy, for the post-halving rally. It would be very, very weird if we didn't get that. So that's where we are in Bitcoin. We've spoken, let's start with this daily chart. Let's put regular candles on. We spoke about this sideways range we were in the Fibonacci pattern that we might see, because we reversed at a 786 fib here. So if we measured from the high in March to the low in March, and this was a 786 fib retrace of this high to low. And when you reverse there, and you've reversed when you get underneath the 61.8 level, we come back to the 38.2. So our first downside bounce level was here at 65,700. This is spot prices. Now, do I think that this is the correction over? No, but you do quite often attempt to bounce around here. And this is a pretty interesting in support and resistance level. See this red hatch line that I've drawn? If I zoom out and we go back all the way back to 2021 in Bitcoin, which are the highs that we're kind of going sideways around. We did this big high, didn't we, in here, let's get rid of that. We did this big high here in April of 2021. That was unfortunately a little bit of an important high, and then it got retested in November. So this first high here is this kind of support and resistance level that we are sideways at today. If we go down to a lower time frame, you can see that the market does look at this level as a little bit of potentially a support level. However, the key question is this the bottom, and are we going to rally away from here, or have we got a little bit further to fall? And I'm going to say further to fall, and here's why. Because corrections, if we're going to go into another wave here, usually have a mathematical relationship, and this third wave is usually either 61.8 of the first one or equal. So if we measure this first leg from this high to this low, project it from here, we haven't quite reached that 61.8 level. It's a little bit lower at 64,000. And again, this equal measured move here is down here at 60,000. If this level breaks at 64,000, I think first time back to it, we're likely to have a little bit of attempt and a bounce, and that might be it, because that if we make that next swing lower, we could argue this is 5 wave down to finish, and we might be done here. However, underneath 64,000, I think that the next level will be 59,000, which will be this nasty sharp low that we made on this pullback on the 5th of March. And these kind of spike levels do very often get retested. So 59 or 60,000 if we get underneath 64,000. So I'm not buying yet. I don't think we have necessarily bottomed, and we don't have either. I kind of have trading rules for myself, so I don't want to just speculatively buy because it looks like it might be done. I like to have levels that I've already looked at in advance to buy at. or I want to see a proper bottoming pattern. Now, what do I mean by a bottoming pattern? You know, a consolidation pattern, a double bottom, triple bottom, like we had here, and then back above the moving averages. So if we were to make a really nice base here and then flip those moving averages, then yeah, that would be a good reason to buy. But for now, I think that we have a little bit further to fall, and the next two levels on the downside that I'm looking at are 64 and 59,000 on this pullback. Though I see some people arguing that maybe this is a little bit of a bullish pennant. So they're drawing it like this from this low. I don't think we've quite got there yet. If we draw it properly, you have to kind of fiddle it to say that we're at the bottom of the bearish pennant, of a bullish pennant here. So another reason to think that we could see a little bit lower to 64,000, and we're not quite done yet. So let's take a look. Remember, if you are bothered by this pullback and about your position in Bitcoin, you can do a couple of things. You could reduce your leverage, be in spot Bitcoin. If you are looking for a big swing position, this isn't a good place to buy. It's a good area for shorter term day trading, and we've got really good levels to watch. But we really do need this bigger on a daily or weekly pullback to continue. If we look at these weekly and daily moving averages, we do unfortunately have a little bit further to fall, not quite where we need to be yet. So patience. Now if we take a look at ETH, in ETH we didn't get all the way up to our, if we measure from our highs to lows, so this is Ethereum dollar, and this is from the high obviously on the 12th of March to the low on the 20th. It's not quite so impressive, is it? Didn't quite get as high as Bitcoin. We made a very clear three-wave correction and potentially win another swing lower. Sometimes, with these three-wave corrections, this could be the first leg, then we could do three waves, and then we could do another one, and we're still in that corrective pattern. So we are still in a corrective pullback at the moment, but I'm a little bit concerned how in ETH we lost this daily 50 today. That can sometimes see in a bit of a nasty bearish move. You can see previously we've been underneath it and recovered it. It doesn't look like that's happened today. And so when we do that, we are likely to retest these lows, I'm afraid. Now, if we measure the swings in ETH from this high to this low, from the high of this three-wave correction, the first target, which is where this swing would be 61.8 of this first swing, is a retest of the lows, and it is down here at 33,000, and 45, basically 3,050 around there, and around this previous low. And if we break under there, which is where the support is, then we're likely to continue lower to 2,650 next. So 3,000 and then 2,650 on the downside is the next support. I wouldn't, double bottom. This market loves a double bottom. I wouldn't be surprised to see that. But again, underneath this daily 50, moving average in ETH dollar is really bearish, because that's where we found support when we pulled back on the 20th of March. And previously, it has been a really good support indicator. It's like the backstop. And if we look here what happened when we got underneath it in January, the first time we got back to it, we got knocked back and a 50% retrace before we could get back above it. But it's a really good indicator for when you do get back above it, because you tend to see a really good run. So not a bottom yet, but back above that daily 50, which is at 3,388, sorry, 3,400, isn't it? Holding above 3,400 could be really bullish and tell us this correction is over for ETH. So that's where we are with that. Somebody asked me, what did I think is going on with Kucoin? Am I worried about it? Should you get your money back? Well, I don't think there's a problem with Kucoin, the exchange. And this is a problem with the regulation, right? They've been accused of money laundering, basically. And they were kind of vulnerable for it because, you know, until last year, you didn't have to do KYC with Kucoin. And when they did introduce it last year, if you were ordering an existing customer of Kucoin, you didn't have to do it. It was only for new customers. So they kind of brought that nasty attention on themselves. And there's a big allegations. They were a big user of big inflows from the Tornado Cash coin mixer. And so, yeah, it's a little bit, I don't think, you know, it's possible that the US authorities could shut them down. The founder of Kucoin's still in jail. I'm not there's a lot to be said. Everybody wants regulation and KYC. I have to say that KYC is a little bit, makes you vulnerable. You know, all of our information, or everything people know to, everything people they need to know to, you know, scam us, is held on these exchanges, which can be hacked. We know they can be hacked. Or I am not a big fan, let's say, of most centralized exchanges having so much information. It's, you know, so don't keep all of your money or coins on any one platform. But in general, I don't see anything wrong with Kucoin. I haven't heard anything else. It's just the authorities have them in their target zone. And I think, you know, that's happened to other exchanges, and the exchanges have made a settlement. We will see if Kucoin will be able to do that this time. They are compensating those people who had delays getting their money out with a coin drop of the Kucoin token. So, you know, they're obviously trying. I wonder if that's just a kind of ploy to keep people money on the exchange while they, you know, sort it out. But yeah, be careful and don't have all your money in one place anywhere on any centralized exchange. Right then, let's move on and look at more requests. So first one we're going to look at is Solana. If I can find Solana. Here we go. So most altcoins are pretty choppy with the corrections that are happening in Bitcoin. And we can see when we look at Solana, we've got a very kind of similar pattern going on to what we have literally just seen in Bitcoin, haven't we? So if we go down to a 4-hour and we look from the low that we made on the 20th of March, just like Bitcoin, it looks very kind of similar, choppy, overlapping, corrective. This was our first swing. Sorry, measure from this low here. Then we reversed exactly at this equal measured move. We made an attempt at a bounce from this 61.8, got underneath it. You know, this is another leg lower. So in Solana, rather than measure fib retraces, let's measure this first swing lower and project where we are likely to go to, because we have not quite tagged that level yet. It's 175. And I think underneath 175, if we do that bigger equal measured move, it's down here at 157. If we go back to the daily, that kind of makes sense. At the moment, though, we haven't broken underneath this daily 20 moving average. You know, potentially we could just retest this low tomorrow at 175 or this week. If we hold this low at 175, we could be done here in a little bit of a pennant pattern. If we're going to do the bigger bull flag, 156 would be next. And if the world ends, which it, you know, might, I'm not leaning on these fib levels particularly from this high to low, because we didn't kind of clearly touch this 786. But if we did do that and we got stuck underneath what, you know, if 175 doesn't hold, if we got stuck underneath 168, it could be that we've completed this 5 waves up, in which case we could see one of those bigger pullbacks back towards these swing lows and back towards 90 in Solana, and this 5-wave rally is done and we're going to see a bigger 3-wave pullback, which would be, you know, something like this. Anyway, it might even look like this, you know. So we do need to be careful. I would not want to see a weekly close underneath 168. That would, because remember, even if we didn't quite tag this level, fibs are like a kind of ladder and you kind of need to hold them. I'm not entirely comfortable with these fib levels in Solana though, so I'm not leaning on them too much. For now, this is just sideways consolidation in a really nice uptrend. And what we saw previously when we had a little pullback, look, see this big weekly thrust candle that was the last big one? 50% back of this big green thrust candle held very nicely as support. So in terms of candlestick traders, they're going to be looking at the same for this big thrust candle that we made at the beginning of March here. This is a weekly chart. So halfway back of the open close of this big weekly, as long as we don't close underneath that in terms of weekly candlesticks, you know, we're still in a pretty nice uptrend. That's at 173. We said that our support was 175, didn't we? So let's see if it can hold and make a little bit of a base there. And then, yeah, we could very easily see another long leg higher from here. Now, if we move on, let's take a look at what's going on in the world of Doge. Here we go, page not loaded properly. Let's start again. Yeah. Okay. Now when we were looking at Doge last time on the weekly, we look at the big high that we made in Doge in 2021 to this low that we made in 2022. Big target in Doge was always going to be this 236 fib level, which in Doge comes in at 0.217. And that, unfortunately, is where we have stalled. And if we look at the weekly, we've got a pretty good weekly reversal setting up here. By that, look, this last green big thrust candle, we would not want to close the week more than halfway back. And if we look at the daily, we kind of stalled here sideways and we are in a little bit of a bigger pullback. Now, a bigger pullback to this daily 20 moving average, not more than say 50 or 61.8 of this swing, and a turn higher would be a pretty good look. I'm not quite sure that we've bottomed yet here though. If we go all the way down to the hourly, these hourly moving averages are a little bit bearish and concerning. So I have to say this is probably a level where we might attempt to bounce at this daily 20 moving average in these previous highs, but it's not quite enough yet to convince me that this we should be buying and jumping back in. So that's where we are. If we look at this on the weekly, not, you know, it's still a little bit overbought. Now, if you haven't taken profit in Doge or you're looking at this pullback, as long as we're riding this daily 20 moving average, if you're a long-term hodler, there's no reason to get out of Doge. But if we start losing that, you know, we could come back to these previous swing lows. That would be the most common first stop, which would be back to 0.12. That's quite a long way back from 0.18 where we are now. So it's really kind of all about your strategy. For me, if we start losing those moving averages and we're not really in that uptrend anymore, then it might be time to kind of reduce your position. So no, not a buy, not a clear place to buy yet for me. I'm being a little bit more patient. Now, if I switch my Heikenhashi on here and we look at where we are, let's put that 50 moving average back on. Now, if we say that this is a little bit of a channel, if we go green here, strongly green, and back above these moving averages, or even get above them and like a pullback like we did here, you know, for me this is textbook. 3 waves back, bounce off the 4-hour 200 moving average, flip them bullish again. This is such a cool place to buy. But here I think it's more likely we're going to see this, and then, you know, if we make a little bit of a base here, like this double bottom we got, that would be more textbook. By then you pull the moving averages down and then get above them. That's the good place to look to buy. So for now, I think it would just be a bounce and a downtrend. Maybe use that to take some off, but it's not a good place to do bigger buys yet for Doge. Okay, let's take a look at some more requests. We're going to look at Tau. Let's see where we are. Okay, next request is Tau. Now in this one, let's start with the weekly and look at where we are in this one. It's possible that we have done 5 waves up from the lows here, which means we could see a little bit of a bigger pullback. And if this was an extended wave 5, we could come all the way back. And this one is a really wild one, isn't it? That would mean quite a long way back. For now, though, I kind of think we might be at a place where we might stop. If we look at previous swings, the first time back, this 50% was a really good support. So this is the most recent swing. We bounced from this 50%. We did it here, bounced, and then we went down to the 61.8 before we bottomed. So potentially, you know, when we look at, we're in a trendy market, and if we are doing those 50% retraces, that's a pretty good place. So here we are, potentially bouncing from this 50% retrace of the most recent swing, or basically the January low this year. Now, if we look though at the daily and we go down a time frame, it's not clear, is it? We've got a bearish cross of our moving averages, and I would like to see a bit of a better bottoming pattern before I think that this one is going up again. So very nasty bearish reversal, first time back to the daily 20 moving average. That doesn't mean that this won't be the low. We did it here. We bounced off the 20 moving average, but we made a lower high and then got above it again. And then this was your buy signal. This was when you got above it again and held above it. This is when you go, okay, if we can break out above this daily 50 here and make a bottom, this is the new swing. So we got the same thing here. We need to see either a higher low or a double bottom at this 50% level, because otherwise, unless we can recover these moving averages, we are pointed lower, unfortunately, and we're going down like a staircase. So in Bitsensor, if you're waiting to buy, you need to see a higher low and turn it back up again above these daily moving averages, a double bottom or a bottoming pattern, or, you know, inverse head and shoulders or something like that. So not a bottoming pattern, still headed lower. But I'm watching this one because always these 50% retrace levels, they're always really interesting. When you bounce from a 50% retrace level as well, your first target is going to be 50% going the other way, because mean reverting markets tend to keep mean reverting. So you would expect a little bit of trouble if we were to buy it from here. We would expect a little bit of trouble at this 50% level, which is here. 610, and then above 610, yeah, we could say probably we have bottomed, and we would look, you know, for a breakout holding above these moving averages on the daily and going high. That daily 50 and around that 50% level. So the 50% level is 610, and that daily 50 moving average is at 620. That would kind of be the tricky zone that's going to be hard to get back above. Above it, yeah, we are going up if we can hold above those levels in Tau. Let's take a look at FXS. This one had a nasty move today, because when I look at this on a weekly, you know, this weekly 50 moving average, when we tested it in January, was support, and when we tested it twice in March, it was support. We couldn't close underneath it. So here we are again looking underneath this weekly 50 moving average, which was really good. Resistance, resistance, support, support. So that's at the moment at 7.09. So that's the level that FXS needs to hold back above against the dollar, or tether, to be going back up again. We go down to the daily. Doesn't look so promising either, does it? Because again, this level that we've broken underneath was also the daily 200 moving average previously. Very good support and resistance, and a good indicator that we were on our way up again. And so we're stuck underneath it, and that usually, unfortunately, points to lower. What I also am a little bit nervous about is I really kind of don't like this lower high. So for me, FXS, yeah, pass, thank you. Now, do the fib patterns tell us anything about where we might be headed? Well, they kind of do, don't they? This 61.8 was where we reversed underneath this 236 fib then, and these, yeah, it's not looking so good. Let's take a look at it maybe the other way. These markets tend to make patterns, you know, and you can give yourself targets from them. Yeah. You know, when we look at these weekly moving averages, completely flat, and we're in this big kind of sideways pattern, it's not... Losing this weekly 50 for me is not a buy unless we recover it. I also kind of am a little bit worried that maybe the market saw this as an ABC. We fell a little bit short of that 61.8 level, which kind of makes this one big, you know, bear flag. That's what we need to watch out for. For me, no, I think we're headed lower in FXS. I think that there's potentially, this was a head and shoulders pattern. Perhaps we can see it a little bit more clearly on the daily here. So left shoulder, head, right shoulder. The neckline is around this daily 20 moving average, which case, if we measure from this, we are likely to come back and retest these lows around 4.7. So pretty bearish this one, unless we can start recovering that daily 200 or the weekly 50 moving average in FXS. Let's take a look at SEI. Haven't looked at this one for a while, and this is another one which has made kind of one of those topping patterns. So these fibs are not correct. Let's take everything off here. So if we look at this on the weekly, we never got a weekly close above that first high that we made in August 2023. It looked pretty promising on the daily when we closed above it. But if we go to the weekly, and the weekly closes are really important, we did not get this weekly close above this round number one. And that's very often levels where you see profit taking. So the first support would be this 236 fib. We got underneath it, became resistance here on the weekly. Perhaps see it a little bit more clearly on the daily look, that 236 fib. We tried it, it was then became resistance, and today this 38.2 was support, and today we're underneath it. So that becomes resistance, and we are likely, I think, to continue lower to this 50% level at 0.62. So for me in SEI, unless it regains 0.746, which is this swing low from mid-March, we are likely to continue lower in this one, and the next downside target is going to be 0.62. Now that's going to be quite an interesting buy level, 50% retrace of this whole rally. My favorite pattern is a 50% retrace and an equal measured move. It's not quite in this one. In fact, the equal measured move comes in lower at this 61.8 level, so I won't be buying this here, but I'm going to watch it. Let's watch it, because we have seen really nice bounces at each one of this previous fib level. So the next support for potentially a really decent bounce, potentially 50% of the drop is going to come from 0.62 next in SEI. So further to fall unless we can close above 0.746, unfortunately. Okay, let's take a look at a few more requests. Next one we're going to look is ETHFI. Let's go to the weekly. We're going to look at it and tether. So remember, these big weekly thrust candles, 50% back, is where we would normally look for some support, and that's also this swing high. So even though this is very new, we are kind of at an interesting level. If we look at this on the daily, here we are. Now, that's the swing high again from March. Let's look at some fib retrace levels for this, from this low to high. It's kind of around this 38.2, isn't it? It looks to me like we've got a little bit stuck underneath it, which is unfortunate. We're also underneath yesterday's swing low, so potentially still headed lower. Let's take a look at this on the 4 hour. Bearish cross of these moving averages. I have to say, I think this possibly has a little bit further to fall, but I'm not going to say it yet because this is quite an interesting support and resistance level. If we hold it 5.3, all good. Watch for this on a lower time frame to make a bottoming pattern and turn higher. At the moment, the hourly moving averages are resistance. We need to see a bigger bottoming pattern on the hourly. So I don't want to buy this yet, but it's an interesting level to watch and see if it can hold. Maybe. Let's take a look at ALPH. Sorry. Tongue twister. ALPH. ALPH. Okay, if we go to the weekly on this one, this is another one that's at a really interesting level, 50% retrace. So we're a little bit sideways at it. Now, if we go down to the daily, you can see that when we tested this 50% retrace level in ALPH in March, it really held pretty well. We had really nice bounces off it. The problem is that we've now gotten underneath it and we are continuing lower unless we recover this level, 2.42. So 2.42 key resistance. We are continuing lower in ALPH unless we can recover this level, in which case we'll go back to the top of this sideways range, which is a 2.8, and the next support here is going to be 2.04. Now, am I going to jump into buy that? I have to say not. There's a few reasons why. Okay, we broke these highs, so this is not a pullback before a fifth wave. This looks like a three-wave rally, and the most common retrace of a three-wave rally like this is a 786 fib and this swing low, which is down here at 1.49. So I think we might bounce from 2.04, but potentially ALPH has further to fall, and I would only revise my view if we can get back and hold above 2.42. So that would mean here on the hourly, yeah, it's really the lows from the mid-March, from 15th of March that we need to get above. So yeah, I'm not a buyer of this one yet, unfortunately. Okay, next request is Ripple. This one has been tricky. So if we zoom out and we look at Ripple, big picture, you know, that 50% thing that I keep talking about, this for me has been a little bit of a problem here. Now from the low, this looked like a pretty nice bounce, didn't it? So we had our big rally, we pulled back to this 786 fib level, we found resistance at the 61.8 above this level, confirmed it, and we hit our target of the 38.2. The problem is we've got a little bit of a double top here. We're pulling back, we're going sideways. All of these weekly moving averages and daily moving averages are very flat sideways. It says no trend. And bigger picture, if we go back to the weekly again, I have to say this is starting to look like a bear flag, isn't it? So now, could I be wrong? Could we find support from these weekly moving averages and turn higher? Maybe, but at the moment, you know, in terms of a channel, this is really choppy. It's not, yeah, I don't see enough of a trend to make this an interesting trade for me. Now, do I think that this is an interesting level to bounce from? Yeah, I definitely do here at the daily 200 moving average. But what I don't like is, as we've seen in a lot of other coins, this potentially has the look of a head and shoulders pattern here on the daily, with this 200 moving average as the neckline. Left shoulder, right head, right shoulder. If we measure from the low that we made at the end of January, so January low to high, we're in that really horrible 61.8, 38.2 golden ratio zone where we tend to just chop around. And we're also sitting on this 61 fib level. That's kind of cool because it makes it very clear these previous lows. 0.584 then is the support, and if we break it, we're going to continue lower to this 786 next, and then potentially the bottom of this channel. So 0.584 and the daily 200 moving average, which was exactly what we bounced off in March. Could we do it again and go high? Yeah, we definitely could. We could be going 1, 2, 3, 1, 2, 3 back, and we see another leg higher. I don't think this is the best head and shoulders pattern I've ever seen, because I don't like how this left shoulder is quite small compared to this right shoulder. The best ones tend to be very kind of balanced, so I'm not going to count it as a head and shoulders pattern with the target all the way down at the lows, but some people might see it that way, so we need to be careful. So we can say underneath 0.5846 we are likely to continue down to 0.54 before we find a bottom. Remember, April, not just in crypto but in stocks and a lot of other markets, can be a pretty choppy, volatile month, and we need to watch out for that. If we look at this is the oldest volatility index in crypto. And we said back here, you know, when we broke above these highs a month ago, that we were headed at least to the top of this channel and maybe higher, and volatility was increasing. When volatility increases, you kind of need to reduce the position sizes. You definitely need to reduce leverage because you will need wider stops. And sometimes it's just a good time to kind of wait and see until it gets a little bit better. So, or everything starts going up again, and I feel like we're kind of in that position with a lot of these markets. So Ripple, yeah, it's not doing it for me. You know, these old school coins. Anyway, the next request is another old school coin, which is Litecoin. It's been a while since I looked at Litecoin. Let's see where we are with this one. The oldest history in Litecoin is Coinbase, because it used to have such high volume as well. So I'm going to look at the Coinbase chart for this one. If we zoom out, oh gosh, look at, doesn't this look like Ripple? And it hasn't even been through the lawsuit. It looks like, you know, big drop, 3-wave rally, big drop underneath the weekly 200 moving average. So this is pretty important resistance that we are sideways at in Litecoin, and previously been very good support, resistance, false breakout. Now, are we going to go higher in Litecoin? If we are, if we can break above this weekly 200 moving average, the first target is going to be the measured move. So I think here what we did is something like this, 23. But this is pretty tough resistance. Now, we haven't got the nasty bearish reversal that we've got in some, but again, let's go to that measured move again. I think I should have said 123, not 23. Sorry, 132. So potentially, if we can break out here, hold above this weekly 200 moving average, first target on the upside will be the equal measured move at 132. It definitely looks better than Ripple. It's holding above this daily 20 moving averages and sideways consolidation. Not sure what's going on here. It's very choppy. Now, when I'm not sure, I get a lower time frames. So this is the hourly. So just like Bitcoin, I put my fibs on the most recent swing. This was a reversal at a 786. So this is exactly what Bitcoin has just done. Remember, if you pause at a 786 and you close underneath this 61.8 level, you're likely to do another swing lower, and your first target is this 38.2. So Litecoin is going to continue lower to 100. Big round number, 100. And then I would expect a bounce, and if it's going to continue lower, it will go from there, and we're likely to see a big ABC. If, though, this is a new swing higher, then this will hold, will turn above or break above this midpoint, and then we'll see that next leg higher. And again, that target then that 132 level. So actually this Litecoin chart looks better than a lot of them out there, but I'm not sure what the liquidity is like. So that's where we are with Litecoin. Holding up pretty well. If it can hold above 100, we could see 132 next. Okay, let's take a look at Fetch. Haven't looked at this one for a while. This one again, no damage to the uptrend yet. And boy, have we seen a pretty nice one. In fact, just like Bitcoin, we're kind of in sideways consolidation at the highs here. But if we look at the weekly, this has been a little bit of a swing failure pattern, which usually points to a kind of at least a bigger three-wave correction. And here we are. Now, previously in this whole big run up, so ever since so we had this correction, didn't we, January into February, and then we've had this big rally. We've held this daily 20 moving average. We held it when we pulled back and tested it on the 16th of February. We held it when we pulled back with a sharp pullback and tested it on the 5th of March. And we held the daily 20 moving average when we pulled back here mid-March 3 times. A close underneath this daily 20 moving average today then will definitely bring us back to these swing lows and potentially back to the daily 50, and we'll see a bigger correction. At the moment we're just underneath it. I don't know if we're going to close underneath it, but it does seem to me that we might be. If we take where we are in fib levels, remember, whenever I'm not sure, I take the most recent swings. So let's go down a time frame. This most recent swing in Fetch then, that's from the low on the Tuesday the 19th of March. We had a really good bounce from this 236 fibs, so we validated these fibs. Really good bounce from this 38.2. Again, we validated it, and a really good bounce from the 50% up to this 38.2. Now here we are sideways at the 61.8, which is pretty messy. Let's put my Heikin-Ashi on. We're just going green, so we could see a bounce from here. The resistance is obviously going to be this 50% in the middle, and if we get above it, we're going to go up to this 38.2 and do that bigger golden ratio zone thing. But if we stay in the downtrend, we will not close back above 2.81. Okay, I'm expecting a bounce here. I would think this 2.81 level gets retested, but we'll see a bigger bounce if we get above it, and then 2.97 next. Not sure it's the bottom yet. If I look at the daily, it could be. Let's see if it sets up. We're definitely potentially at a bounce level in Fetch. Let's take a look at OP. Another request. Here's OP. This is another one in a bigger correction. I'm a little bit nervous this one. I'll tell you why. It looks just like a big three-wave correction. So sometimes in a three-wave correction or ABC, your first swing will be 2 waves, your second swing, and the final third wave will be 5 waves. And this kind of looks like this. So we've got 1, 2, 3, 1, 2, 3, and here's 1, 2, 3, 4, 5. If we are going to continue higher in an uptrend, if I've measured it wrong, then these previous swing lows are going to be support from this 5th wave. So 50% back, something like that. Yeah, 50% back, 2.87. That's kind of, it's pretty spiky, this one, so watch out. If we measure it from the low, we could say that the 50% back from the low lows actually is a little bit lower. So somewhere in this range, I think between these two levels would be where I would like to see this hold if we're going to keep going higher in OP. If we don't, and then this therefore becomes a bigger three-wave correction, the most common retrace I have to say is the 786, which is down here at 1.36. So now we can have a kind of trading plan for a short, because we would expect to bounce and then at this 50% level on a retrace. But if we can only get 50% and we continue lower, and we get underneath this level at 2.6, our first target is going to be 1.3. So we need to just be careful. I'm hoping this 3 waves may be it around here and we keep going. But if we were to make a bigger topping pattern, then the fact that this potentially is a big 3-wave move comes into play, and we'll see a bigger correction. So I'm being a little bit cautious at the moment. I do think this has got a little bit further to fall, but don't worry if it gets underneath these weekly moving averages. You can see we've had a look underneath and we close back above it. If we look at this on the daily, again, look, we've got the bearish cross of our daily moving averages, and this 50% level from the lows at 2.63, where we're looking for it to come back to, is exactly where the daily 200 moving average is and this previous swing low. So that, I think, if you're stalking a bounce level or a level to trade and buy OP, that would be the level 2.63. Okay, let's take a look at AMP. Here we go, AMP. Now on the monthly, what a spike in this one. So if I go all the way back to the all-time highs when it was launched back in a year ago in April 2022, we could argue April's a seasonal high for AMP, but anyway, where we have come back to, this spike got all the way up here, 61.8, but we couldn't close at it. Actually, I would argue we really only rallied on a close to this 38.2. But either way, when we look left, where is the potential support? I would argue it's around this 236 fib on a retest. When I look at these lows here and these spike highs, that for me is going to be the first level support, 0.008. Also, if we say, you know, the open close of this last thrust candle, that also is going to be around there, the 50% around here. You know, wouldn't be weird. But for now, you know, this long tail is very nasty. Not a bottom yet. Not any sign of a bottom yet, unfortunately. Now, on the 4 hour, we could argue that this is a pretty good potential level. We've got this double bottom from the 15th of March and the 19th of March. We've got the 4 hour 200 moving average. It's possible that we do bounce from here. You know, previous highs and lows are usually pretty good, but at the moment I just don't have that bullish signal that I would like to see here. Let's put my Heikinashi on 4 hour, big 4 hour green Heikinashi rally from here. Yeah, I think it would look pretty good with this 4 hour moving average particularly. Just not quite the signal I want to see yet, but a good level to watch for a bullish reversal in AMP. Now, if we zoom out, where would we be looking? I have to say, you know, first target is going to be back to this 38.2, which on the daily was the level that we couldn't close above. So first target, if this is just a bounce and we're going back to the top of the range, it's going to be 0.012. So 0.0123 would be the first target. And then the 50% midpoint, 0.0157, then back to the spike high, and then hopefully we continue higher. If we keep going, I'd be looking at least for this 786 up here at 0.0239. But, so yeah, we just need that bottom. Haven't quite got it yet, but potentially this is the level, potentially a little bit lower at 0.008 for AMP. Okay, I hope that's useful. Let me know if there's anything else you'd like